Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
And I know a lot of people have different opinions as to whether they want an in the money or near the money versus out of the money. I really like utilizing far out of the money and putting time on my side. Okay, that to me is the best use of taking advantage of what I feel is the most powerful aspect of any option, and that's volatility. And like I said, this week we're not lacking any of that, which is what makes this talk of ours here so well timed. I've got almost 80 days to my DEES options expire. Now remember, as I get closer and closer to expiration, DEES 19, I'm talking about losing value in that option from time decay. Okay? But since I've given myself so much time, the time decay aspect, obviously the closer we creep towards that DEES 19 date, will become a factor. But what I'm doing is I'm giving myself the one element that I think is the biggest unknown, which is the when. The where is my strike price. Okay, so where do I think the euro is going to head? Where do I think is a realistic strike? Not necessarily to ever be in the money. Again, I don't necessarily ever buy in the money options, whether they be puts or calls. I'd rather look at where I believe the market could head to as I do my analysis. So in a really basic way on this euro-US dollar, if you're for example, a fan of Fibonacci, which I actually like using a lot, here are my symbols. Let me pull up here. Go ahead and pull up a Fibonacci, or you know what? Let's not even get that complicated. Let's keep it really simple. Where do I think the euro is going to top out? If you guys remember, we talked about the dollar index topping out near that 80 mark. Okay, now I can see here my euro-US dollar will then probably bottom out somewhere around the 3,900 level. This wick right here, by the way, is 38.82, so it's liable to find support somewhere around the 3,900 level. And I do believe this euro-US dollar will stop its slide somewhere between where we are now at 4,000 and 3,800. That's the spot. Notice that the equivalent would be up here on the EUI. The high here was 72.03, and currently today's high was 71.55. So that 4,000 to 3,900 level on the spot is going to coordinate with what I see here. This high between, say, 71.55 we have today and the high here at 72.03. So somewhere in that 50-cent area. Okay, do you see how I've basically coordinated the support and resistance here so I can get a better idea of what I want to get into? All right, so then I realized that that's where I'm going to be bottoming out. But where would I like to buy well, in this case, what am I going to be buying? If I feel that the spot is going to be reversing off that support, it's going to be the EUI is going to be reversing off this ceiling up here, and that will lead me to shop some, what? Puts, right? Okay. So if I'm looking for a put here on the EUI, okay, as I'm suspecting that we'll probably get a bounce here on the euro-US dollar spot, what's a good place that I feel that it's likely to pull back? So let's focus now on, I'm going to clean this chart up a little bit. Take a quick look at the dollar, and just so you know what we're looking at here, this is the dollar and the EUI overlaid, just so you can see the way they move together. So you're seeing where I'm getting my correlation from, right? So let's go ahead and pull up just bear with me here a moment. And what we'll do is we'll remove the overlay just to clean this chart up a little bit. Let's just put the EUI up on the screen. And what I'm walking you through here not only is current market analysis, but how I go about shopping for my options. It's number one is, where am I going to find the support and resistance on the chart? Okay, where is the market going, in which direction? Where do I suspect I might find a floor or a ceiling? And based upon that, where would I like to speculate on the next leg of movement? Now notice, I'm not talking about buying calls here on the EUI. Why? Because number one, I'm going to pay up, and number two, we're approaching a ceiling. If we were talking about, I'm going to rewind back in time just a little bit here to just a couple sessions ago. Okay, so just bear with me here. I'm going to rewind back to right about there. Okay, so notice if we were talking basically back here on this is the 26th of September, the market was much more neutral, wasn't it? In this neutral standpoint, and with the EUI trading well above the 200-period simple moving average, and by the way, the other moving averages that I have on this chart are what I call my lazy days lines. These are just exponential moving averages that I like to use that act in a way as kind of an automated support and resistance. You know, I think that another big mistake that traders make when they make the leap from an underlying market to the option of that market is somehow leaving all their charting analysis behind. Again, I can say one of the benefits I've enjoyed from my successful options trading comes from successfully understanding where the underlying market is going. Options are not just a reason to throw that analysis out the window. Bring it with you, because a lot of times you're going to find, especially in quiet markets like this, I'd rather position myself in the market with an option in a quiet market than even the underlying spot, because the volatility aspect, once this market goes from quiet to a much more volatile personality, I'm going to be better off in the option than I will be in the underlying contract due to, again, the three dimensions. I've got time, strike price, and volatility. And it's always that volatility aspect that I want to capitalize on. I want to make sure that time decay is not going to erode the value of my option, and I want to utilize that volatility aspect, because that's the part of the option that really gives me the greatest, in my mind, leverage. Okay, so in this quiet market, now how am I going to determine at this point whether I would like to buy a put or a call? Well, this goes to your charting analysis, your underlying charting analysis. In a market that's going sideways, to be quite frank, we could look at a breakout or a breakdown, and perhaps in that regard you might buy a put and you might buy a call and basically hedge in a sense. Now, being above the 200-period simple moving average here counts bullishly for me. Having all the support from my lazy days lines, which again are just exponential moving averages, you can see the settings here in the upper left-hand corner of my chart. Again, these are telling me that there's probably more support in this market than resistance, and I'm more likely to go ahead and step in and buy a call. Okay, I don't care what your underlying analysis is. I don't care if you're looking at whatever tools you've got right now. You don't have to change your trading style in order to employ these options. Okay, it's a matter of sitting down with whatever analysis and methodology you've got and ask yourself, on the 26th, do I feel there's a greater likelihood for a bounce in the euro-US dollar or a continuation of the direction? In this case, the EUI, the bounce here would mean that the euro-US dollar is going to head down lower. Okay, so then you would go back and take a look at what the dollar index is doing, what crude oil is doing, and a number of other factors that you should consider in your Forex trading anyways. But again, what we're trying to do here is capitalize on a quiet market and utilizing a tool that will allow us to really capitalize on volatility in a way that the underlying spot would not. So it's not a matter of saying options are better than spot or spot is better than options. Ideally, you're learning how to use both. You're learning that, okay, I could get into a spot and look for a short on the euro-US dollar, but if the market moves with volatility, we don't know right now, but because the quiet nature of this market right now, because it's all gathered up in one area. In fact, this week, by the way, was an inside week. What I mean by that is Monday set the range for the entire week. We traded within the range of Monday's trading session, Tuesday, Wednesday, Thursday, and Friday. That's pretty quiet trading. And when I get a moment like that, I'm telling myself, wow, I might go ahead and at some point buy or sell the euro-US dollar, but wouldn't I love to take advantage of this coiled spring when it finally does explode, with the benefit of having the volatility aspect of that option. Everyone with me here?
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.